Welcome to the School of Crypto Lights YouTube channel. Imagine waking up one morning to see your crypto portfolio has doubled overnight. Sounds exciting, right? But what if the next day the market crashes and you lose everything? This is the reality of the cryptocurrency world, where fortunes are made and lost in the blink of an eye. The difference between success and failure? Following the right rules. If you want to stay ahead in 2025 and make consistent profits while avoiding devastating losses, you must follow these 8 essential rules. These are the same rules that top investors and traders use to survive in this unpredictable market. Ignore them at your own risk. Let's get started. Rule number 1. Invest what you can afford to lose. This is the number 1 rule in crypto investing. Never invest more than you're willing to lose. Why? Because the crypto market is the Wild West of finance. Prices can double in a day, but they can also crash by 90% overnight. Example. In 2021, people went all in on meme coins like Dogecoin and Shiba Inu, only to watch their portfolios crash by over 80% months later. Some people even took out loans to buy crypto. Big mistake. Pro tip. Treat crypto as a high-risk investment and allocate only a portion of your portfolio to it. Don't put your rent or savings into volatile coins. Be smart about your money. Rule number 2. Always do your own research. DYOR. Hype can be dangerous. Just because a coin is trending doesn't mean it's a good investment. The crypto space is filled with scams disguised as legitimate projects, influencers pushing worthless tokens for personal gain, pump and dump schemes where early buyers sell at a profit while new investors are left holding the bag. How to research a crypto project. 1. Check the team. Are they real experts or anonymous developers? 2. Read the white paper. Does the project have a real-world use case? 3. Community and adoption. Does it have a strong community and active development? Check tokenomics. Does the project have a fair supply distribution, or are insiders holding most of the tokens? Example. Projects like Solana and Polygon grew because they solved real-world problems. Meanwhile, scams like Squid Game token tricked investors and disappeared overnight. Warning. If a project promises guaranteed profits, it's probably a scam. Rule number 3. Diversify your portfolio. Putting all your money into one coin is like gambling on a single lottery ticket. It's risky. Even strong projects can have unexpected crashes. That's why smart investors spread their risk. How to diversify? Smartly. 50% Bitcoin and Ethereum, the most stable and safest bets. 30% in altcoins. Pick quality projects with strong fundamentals. 10% in stablecoins to secure profits and buy dips. 10% in high-risk projects, only if you're comfortable with potential losses. Example. Imagine you invested everything in Terra, Luna, in 2022. It collapsed to near zero, wiping out billions of dollars. But if you had diversified, you wouldn't have lost everything. Rule number 4. Secure your assets. Use cold wallets. Crypto hacks are on the rise. Don't be the next victim. Crypto theft has cost investors billions, and leaving your assets on an exchange is a disaster waiting to happen. Best security practices. Use a hardware wallet, cold wallet, like Ledger or Trezor. Never share your private keys. If someone has them, they own your crypto. Enable 2FA two-factor authentication for extra protection. Back up your recovery phrase. Store it in a safe place, not on your phone or computer. Real-world example. In 2022, FTX collapsed, and millions of users lost their funds because they left them on the exchange. Meanwhile, those who used cold wallets were completely safe. Remember, not your keys, not your coins. Rule number 5. Take profits strategically. If you don't take profits, you're not really making money. You're just holding numbers on a screen. Many people ride the wave up, only to lose everything in a crash. Smart profit strategies. Take profits in increments when prices rise significantly. Convert some profits into stable coins for safety. Reinvest wisely in strong projects instead of chasing hype. Example: imagine buying Bitcoin at $5,000 and watching it go to $60,000, but then not selling before it dropped to $16,000 in 2022. Don't let greed ruin your gains. Rule number 6. Stay updated on market trends and regulations. Crypto is evolving fast. If you're not keeping up, you're falling behind. Stay ahead by following crypto news sources, CoinDesk, CryptoSlate, Twitter, X. Watching for government regulations that could impact markets. Studying emerging trends like AI-powered blockchains, DeFi, and NFTs. Example: in 2021, El Salvador made Bitcoin legal tender, a game changer. Meanwhile, China banned crypto mining, causing prices to crash. Knowing these moves early helps you make better decisions. Rule number 7. Master emotional control. Don't FOMO or panic sell. Your biggest enemy in crypto isn't the market, it's your own emotions. FOMO, fear of missing out. Buying at all-time highs because it's going higher. Big mistake. Solution: wait for pullbacks instead of chasing pumps. Panic selling. Selling everything when prices drop out of fear. Solution: stick to a strategy and don't let emotions control your decisions. Example: Bitcoin crashed to $3,000 in 2020 and many panic sold. A year later, it hit $69,000. Those who stayed calm won big. Rule number 8. Understand the power of compound growth. Crypto isn't just about short-term gains, it's about long-term wealth. How to grow your portfolio. Staking, earn passive income with coins like ETH and ADA, yield farming and DeFi. Lending, put your crypto to work. Reinvesting profits. Instead of cashing out completely, reinvest wisely. Smart investors play the long game. Follow these rules, and you'll be in the best position to win in 2025. Which rule do you follow the most? Comment below. Subscribe for more crypto tips and strategies. The crypto future is here. Are you ready?